Well, after the big beating that it got yesterday, the stock has hardly recovered. In fact, it's trading on the flatter side, just down close to about 0.25%. The management addressed the conference call with the details on the deal with Havells. Later on, we spoke with the management as well. Anisha joins in with the key takeaways from the interview as well as the conference call. Anisha?
Well, yes, Rima, actually the stock is down 5-6% from its highs because a lot of questions were asked on the con call regarding the use of proceeds, because that remains a key question. Now, the management was a bit ambiguous. They said they don't have a plan as of now, but when the deal is closed in March, that is when they will come out with the exact details of how they're going to use these proceeds. They did say that they're going to use these proceeds to pay down the debt partly and also look for growth in terms of organic as well as the inorganic way. They said that they would be left with around 500 to 600 crore worth of cash, and they are looking at various options to increase shareholder value. They did not really comment or commit to anything, but they did say that buyback and giving special dividend remains an option on the table. In terms of the other avenues that they're looking at, they said that they would be venturing into transport ACs, which is metros and railways, and also looking at air conditioning system in the defense, tanks and ships, etc. So that comes as a completely new business for the company. In terms of the growth outlook of the continuing business, which is the OEM business, they said that revenue that was earlier booked as a part of consumer durable segment will now be booked in the OEM segment, and that can bring significant uptick as far as revenues is concerned. And they also said that the margins on the OEM business would be maintained at current levels, and they also said that the deal that they do with Havells in terms of the supply chain would be done at arm's length price, and they will continue charging the same margins as far as Havells is concerned. In terms of the capital employed, they said in the continuing business, the need of capital allocation is minuscule. Despite it running on 90% utilization, they said that they won't be investing too much into the continuing business. And they also said that they're expecting significant growth in earnings going forward. There was also some questions raised on why the management went through the demerger, didn't go through the demerger route and did it on some sale basis, to which they said that it was purely based on the tax rationale of the deal. But as of now, maybe the street is still a bit spooked in terms of the utilization of the cash. In fact, let's listen in what the management had to say.
It will deleverage the balance sheet. That is one objective. The second objective is that we would look at investment in high margin areas. Mr. Punj himself, the chairman, was in the investor call, and he has told investors that, look, right now we have just signed an MOU. The closure will take 6 to 8 weeks.